Hi farms, guess you're good. In today's video, I'll be talking about the concept of liquidity. You probably have heard of liquidity in the Forex market. So I'll be explaining to you what liquidity is, the types of liquidity, and then we look at chart examples. If you don't understand liquidity, you probably are going to be the liquidity. So what is liquidity? Liquidity is simply the concentration or accumulation of money within a region in the market. It simply means where money are in the market, where others are, which equals to stops. Now, let me explain this. When you get stopped out in a trade, it means your position or money is transferred to another person. This is liquidity. Smart money tries to accumulate orders and allow retail traders like you and I to get involved in the market. They run their stops and then move price to their way. Understanding the application of liquidity in the market is very important because it helps you know an order block that is valid. You will need to watch this video on my channel to understand market structure and how to spot a valid order block. Now, types of liquidity. Like I said, liquidity, smart money wants to play around, move price at a zone or a region, and then all of a sudden they take everybody out and price goes their way. So you will hear people complain, oh, immediately I bought, the market started selling. When I started selling, the market started buying. Stuff like that. Let me talk about the types of liquidity. Today, I will just speak about two types of liquidity on this particular video. Then we take some chart examples. Number one is static liquidity. Static liquidity. This is simply smart money. When smart money decides to move price within a zone or a region, liquidity that is built around a zone in form of equal highs, equal lows, double top, double bottom, sometimes triple touch at a zone. This is a concept of support and resistance. So price comes here, bounces at this support, price goes up, rejects at this resistance, comes here, bounces again. So retail traders are looking at taking an entry from first touch, second touch, then they are expecting price to come here so that they can take price back to this zone. But what did price do? Price cleared all this touch. This form of liquidity here were cleared. So this is the concept of support and resistance. Price came here and then it sold. Price came here and it sold. Price came here. Instead of selling, first price cleared those that were selling here, wicked them out. You can see that wick. And then price came at this region, cleared those that are here that were buying from this region. And then price went up and cleared this place as well. So if I extend this, while retail traders are waiting, okay, let's get in on this trade and then sell from here. Price came, cleared this. Okay, let's say we didn't get this. You're expecting to now sell from here. Price came again, cleared this place. So this is just liquidity. This is the concept of liquidity. Price wants to do its thing. Price wants to do its thing. So this is liquidity. Smart money is just building price, building orders around that region. Sometimes you can have price come, let's say something like this, gives you a touch like this, goes up, come back, touches it, and then you can have it come this way, come this way, come again to that region and bounces up, just as you can see from the chart. So those that trade trend line, they want to wait for price to come. This is what we call static liquidity. You're waiting for price to come in again to that region, and then at the touch of it, you want to take price higher. But you can see from this place, price came, wicked out those that were here. So this is just liquidity. Price came, wicked out those that were here. So you trade trend line. This is what we call static liquidity, or trend, or support and resistance liquidity. Support and resistance, not trend line. This is trend line. Support and resistance. You want to trade, okay, double top as you have here. You will always find this in the market. So you need to understand that this is just some form of liquidity. Smart money playing their thing, but at the end, they are coming to kick everybody out. Then number two, dynamic liquidity. This is trendline liquidity. As you can see from my chart, this is dynamic liquidity, where price creates a touch on the trend line and then retail traders get involved. They take it as a bias, whether a sell or a buy. Now, let me say this, that a trend line is respected does not confirm anything. Trend lines don't move the market, price does. So you don't want to be caught in the web of traders who trade trend lines and get trapped like this. This is just smart money doing its things, accumulating liquidity to be taken. So you come here, you want to buy, it actually bought, price came here at the touch of it, and price actually bought. Then you are expecting price to touch here and buy. What did it do? Smart money came, cleared all this trend line that was accumulating here. They actually bought, but boom, they came back and cleared everybody out. Now look at this other side. At the touch of it, your price sold, price came back, second touch. So retail traders wants to get in here and then they sold. So right now they should be waiting. Price will come back here and sell. So this is just trend line liquidity. At smart money, we know that this is liquidity building up. They want to walk price around, induce retail traders. And that is why we tell you to have the knowledge of liquidity. If you don't know this, you have no business trading the stock market or forex or anything that has to do with chart, because price will always do its things. Now let's scale down to what price is doing. You will see that this market has been bearish, so we're expecting price to go higher and keep selling. So this is just a pullback to keep selling. All right, let's take some chart examples. As you have seen from here, let's see what we have on this. All right, look at these tons of liquidity that were built here. Price came, sold, price came to this place, and then we're expecting price to come back here and sell down. What did price do? Price broke through, and as you can see, current price action, price has used this week to clear everybody that was sitting here. So this was some tons of liquidity building around this region, some tons of liquidity. You can also see some forms of equal highs here, equal highs around this region too. You can see some forms of equal highs around this region. That's liquidity, equal highs, equal lows. They are all tons of liquidity being built. Price came here at this touch, price bought massively, price came here, then we expected price to come here and buy. Price actually bought. But the next time smart money is coming, they might just take away all this thing you have, all this liquidity that is built around this region. Might just take everybody away. You can see this trend line liquidity that was being built here. So these are forms of liquidity in the market. You want to be able to spot this thing where price is going, and then how you can spot your entry quietly. Let me go back to this chart example. Let me go to a lower time frame. Let's say the 2 hours. Let's see what price did within the 2 hours. What price did within the 2 hours. This is how you want to be able to spot liquidity, and then you are able to trade the market. You know the footprint, you know what price is doing. You can see price creating these tons of trend line liquidity within this place. Price is trying to give us these forms of liquidity around this zone. And then price is currently bullish. Remember, this is a retracement. What I can see from here, there's a form of double top or triple top around this place. This is liquidity resting within this zone. This is liquidity resting within this zone. This is liquidity resting within this zone. So price is coming to clear that liquidity within that zone. So that's what smart money is doing. And then you can see there was a break of structure within this zone, downwards, break of structure in that place. So probably price can come into this zone, clear this liquidity, and go down. Price can do that, but you want to be able to spot out the liquidity so that you know where price is going to, because there'll be a liquidity to be taken. Sometimes it will be liquidity for targets, liquidity to be taken, and liquidity for target. So price takes this liquidity, and then price comes down to take this liquidity. That's what price does. It will always do that. It clears these highs and come to clear these lows, or clears the lows first and go to clear the high. So you want to be able to identify which of the liquidity price wants to come and take first, so that you don't get caught in the region. Sometimes price can give you something like this. Can give you something like this. When price is in a downtrend, it can give you something like this. Give you something like this. And then you see some forms of trend line around this region. And then you want to wait for price to come back into it, and then say this is just liquidity. It doesn't mean anything. It doesn't mean that the market is going to reverse whenever it gets there. It's just liquidity that is to be taken, and then market goes its own way. So let's see what this has been doing. You can see if I pitch my screen together, it has been on a bearish trend that's been going down. So let's see the recent price action. Recent price action. Let's see. Okay. All right, maybe something like this. Price was coming down. First, price broke this. This was liquidity here. Price cleared this. Price cleared this. Close. This was liquidity here. And price close broke this. So this was a break of structure. This was a break of structure. So we're expecting price to come back to this imbalance. You can see the huge imbalance that was left here. You can see the huge imbalance that was left within this region. So we're expecting price to come back here, and then price should buy to these highs because of these equal highs that you can find here. Price actually came into it, and price went this way. But if you watch carefully, you will see that price accumulated within this place for a very long time. Price was just in this region. This is liquidity, static liquidity. Price was within this zone, building up, and then what did smart money do? Smart money came while everybody is expecting that price should come here and go above this. Price should come here and go above. What did they do? First, they came and cleared this. To tell you that it's liquidity, they came, they cleared this. You can see, price cleared this. After clearing this, they came back and cleared this because this was also liquidity building here. They came and cleared this. So this is how to be able to spot liquidity in the market. They came cleared here. First, liquidity to be taken, and then liquidity to be taken. They cleared these highs also. So what did price do? Price came and gave us, price came back into this region. So if you regard this as a break of structure, price was supposed to come back into this place and was supposed to go up. Price came, cleared this. You can see that with price came down as if it was coming here to retest and came back and cleared these highs. Now price came here, it couldn't clear these lows, is still within this region. This is the daily time frame. But if you can also see, you will discover that this was some form of liquidity, or this is some form of liquidity building around this region. On the bigger time frame, you can see price has been within this region on the bigger time frame. Price came here a touch, but price came, did its things, accumulated a lot of orders, liquidity around this place, and price came back here, did its things, and then price is back here now. So this is some forms of liquidity that is building around this zone. So price is building within this zone for a very long time. This is daily time frame. So this will definitely has taken months and months and months. Yes, this is since June last year. Okay, June this year, price was here. And then price came back for a second touch in September. And now price is back for the third touch, December. So this is a very long time. But I know that smart money is going to do something like this. Might just decide to come up like this, and then we clear everybody. This is what smart money is going to do. This is the concept of liquidity. You want to understand what smart money is going to do, what they are planning to do by price. You want to see what smart money is going to do. They might just come, create all these, and then weak everybody out. Because this is liquidity building within this region. You can see it is very clear. So let me remove this. This liquidity, while we're expecting price to go up from here, let me use the arrow sign to go up from here. Price didn't obey that. So price doesn't want to obey you. Price just want to do its things. You need to be able to figure out what price is doing so that you can trade the market. So price can come do this for us, because you can see if we open this, you can see structure here, a high, a low, a low, a higher low, a lower low, a higher low, a lower low, a higher low, a lower low. So price might just come from a higher low at this place and we go for a lower low. This is liquidity. If you are getting value from this video, kindly subscribe to my channel to stay updated on simple trading strategy using price action, ability to spot liquidity, and how to take trades. Remember, in today's video, we spoke about static liquidity, the liquidity build around support and resistance, double top, triple bottom, equal highs and equal lows. And then we spoke about dynamic liquidity build around trend line. Like I said, if you are not able to spot the liquidity, you are probably going to be the liquidity. You'll be taken out of the market. Don't forget to leave a comment in the comment section. I will be there to answer it. Drop your questions there as well. Thank you very much. Peace out.